भाई लेटेंट व्यू के आईपीओ में लगा दे, सच बता रहा हूँ बहुत फायदा है। भाई पेटीएम के आईपीओ में लगा 100% लिस्टिंग गेन्स होंगे, मेरी गट फीलिंग बोलती है, मेरी गट फीलिंग। भाई सफायर फूड्स, फिनो पेमेंट बैंक्स, पीबी फिनटेक लिमिटेड। दीदी सुनो ना। बोल दी, आप मोबिक्विक के आईपीओ में पैसे लगाने वाले हो क्या? नहीं। और एलआईसी के आईपीओ में? पता नहीं। अच्छा तो गो फैशन के आईपीओ में तो आप लगाओगे है ना, लग रहा है मुझे। कुछ नहीं हो सकता इस लड़के का, मैं बता रही हूँ तुम्हें। Namaste everyone, welcome to our YouTube channel. I'm Pooja Sharma and in today's video we are going to talk about IPO investing. In the stock market, IPOs are the closest equivalent of an India-Pakistan cricket match. There's a lot of hype surrounding each IPO in the market, as Mr. Parag Parekh had said.
Or why are we so much interested in an IPO? Because it is known as initial public offering. So it's something new. Secondly, in an IPO, it has no track record. So normally you believe in the value of mystery and you are willing to pay, you are willing to follow the Pied Piper, that people are willing to pay much more higher prices for something which is unknown rather than what is known.
To start with, what is an IPO? IPO, also known as initial public offer, is when a private company goes public for the first time. Now you must be confused, what does going public mean? It is nothing but when a company gets listed on the stock market and the general public, including us, the retail investors, as well as the big financial institutions like mutual fund and LIC, get to buy the share of that company and become their shareholders. It is also known as the first sale of company's equity to the public. This helps them raise capital by diluting the company's equity, or in simpler words, by diluting the ownership of the founders and other investors of that company. Now, how does an IPO work? Before IPO, a company is considered to be a private limited company, and as we all know, a private company means relatively small number of shareholders, as it mostly include investors like the founders, the family and friends, or professional investors like venture capitalists and angel investors. So you see, IPO is a big step for any company for two reasons. First, it provides them with an opportunity to raise capital for business expansion and also to reduce debt in some cases. Second, it gives the opportunity to the existing investors like VCs and angel investors to liquidate their early share of investment and reinvest their profits in smaller startups or other businesses. Now, as with most things in the public, not everything is as rosy and wonderful as it may seem from the outside. Because of the copyright issue, I won't be able to play the video here, but I highly recommend that you watch this video. In this video, political satirist Jaspal Bhatti, in a satirical way which only he could, tells the dark truth about IPO and how the companies come up with their IPOs with the help of investment bankers and media agents. Now, if you did watch the video, you might have this question in your mind. So, does this mean that all the public listed companies turn out to be fraudulent in the long run? Well, no, of course not. But what is true is that any promoter would want his company to be given more valuation than what it is actually worth. Because here he has the power to decide valuation, unlike what happens in the secondary market. Wait, it's not that complicated. Let me explain. So when we buy, say, 10 shares of ITC or 5 shares of Asian Paints today, we are buying it from the secondary market, where if we are buying a share of ITC at 200 rupees, then there is a seller selling the share of ITC at 200 rupees. But when a company is coming up with an IPO, it's selling its shares for the first time in public, and it does so in the primary market. To put it simply, the primary market deals with new securities being issued for the first time. After getting listed on the stock exchange, the company becomes a public listed company, and from the listing day, the shares of the company can be freely traded in the secondary market, as we do so in the case of ITC. So you see, in an IPO, when the shares of the company are being sold publicly for the first time, the promoters have the power to set the price of the share of the company. Even the best of the companies come up with overvalued IPOs, as we saw in the case of Zomato. Aswath Damodaran, who teaches equity evaluations as one of his courses at Stern Business School and is also widely considered as the valuation guru, said in a CNN interview that according to his calculations, Zomato's IPO should be priced at rupees 41. But as we all know, Zomato got listed at rupees 76, almost double its inherent value. You see, this is what I mean when I say even the best of the companies come up with overvalued IPOs. And why won't they? It not only helps the promoters to raise more capital for the equity they are selling to the public, but it also benefits the investment bankers as their commissions increase in proportion to the valuation of the company. Watch this 2-minute clip of Mr. Parag Parekh where he explains why IPOs come in bull markets and the entire psychology behind this.
That whenever an IPO comes, investors are always under the impression that it is underpriced. And there will be some money left on the table. In bullish times, because people make gains on listing, they conclude that there is always money kept on the table. But why would someone keep money on the table? Why do they come in bull markets? They come because that time you are willing to pay any stupid price for the stocks. In bull markets, the prices are always going up. So people always go on making money on listing. So IPOs become representative of profits only. Secondly, IPOs will always come in the market where a certain sector or a certain fancy is existing in the market. Like when you had during the tech boom, you will have IPOs of only tech companies coming. Then about last 2 years back, when you had a real estate fancy, you had real estate stocks coming into play. Then infrastructure stocks came. So you are going to see all these sort of representative biases at work whenever an IPO comes.
Now comes an interesting question. Are there any situations where the companies would sell their shares undervalued? Yes, there are. It has got nothing to do with the integrity of the company's management though. When the companies have an urgent requirement of capital or they have legal government restrictions on them, like in the case of banks or NBFCs where they have to get listed within a certain time frame or have to be fully subscribed for them to get publicly listed. In such a scenario, companies cannot risk overvaluing their share and facing a possible undersubscription. Such IPOs are known as forced IPOs. You know, there are two kinds of people investing in IPO. The one with the expectations of listing gain and the other one with the expectation of long-term nostalgia. Now, what do I mean by long-term nostalgia? You will find many old investors who take pride in sharing how they still hold the shares of HUL or Asian Paints since their IPO allotment. And this is what I mean by long-term nostalgia. Holding on to quality businesses you think will outlive you, if not your next generation. So for long-term investment, you would of course want to know the business model and the financials of the company, right? And for that, we have red herring prospectus. Now, what is a red herring prospectus? It is an initial prospectus filed by the company with SEBI that contains almost all information about the business operations of the company, its financials, and its future prospects. So reading it in detail would help you better understand whether you should invest in that company or not. But if you're in the first category, that is, you're just looking to invest in an IPO for the listing gains, then knowing how to apply for an IPO would be enough for you. Before we move on, just in case you do not know what listing gains are, it is the difference between the listing price, that is the price at which the shares are listed on the stock market, and the allotment price, that is the price at which the shares are allotted to you for the first time. And the difference between the two is your profit, which is also known as your listing gain. Now let us take a look at some of the terms which are frequently used in IPO investing. What is price band? Price band is the range within which the investors can bid, but the difference between the floor price and the cap price shall not be more than 20%. Now, what is this floor price and the cap price? The floor price is the minimum price and the cap price is the maximum price at which the bid can be made for IPO. A retail investor can bid at any price within the price band or he can bid at the cutoff price. Cutoff price means that the investor is ready to pay whatever price is decided by the company at the end of the book building process. While making an application at the cutoff price, the investor is required to pay the amount at the highest price band. If the price discovered is lower, then the excess amount is refunded. What is a bid lot? Unlike normal share trading, where we can buy even one share, IPO sells shares in lots. And a bid lot is the minimum number of shares an investor has to apply for. For example, in the case of Go Fashion India Limited IPO, the bid lot is 21 shares, which means that you cannot apply for less than 21 shares for this company's IPO. So this was the first part of our IPO investing series, where we learned about what is an IPO and the important terms used in IPO investing. I hope you enjoyed the video. If you did, give it a thumbs up and share it with at least 3 friends of yours. I think that's doable. Come on. And if you have not subscribed to the channel, what are you waiting for? मुहूर्त नहीं निकलेगा, कर लो सब्सक्राइब। हाँ बिट्टू, सोनू बोल रहा हूँ। भाई तू तो कह रहा था कि पेटीएम में लिस्टिंग गेन्स होंगे। चुप कर, फोन काट। मेरे से क्या एडवाइस मांग रहा है? मनी मास्टर की वीडियो देख ले। पता नहीं कहाँ से चले आते हैं एडवाइस मांगने। और आप लोग भी मेरी मत सुनो, जाके मनी मास्टर की वीडियोस देखो और सब्सक्राइब कर लो उनके चैनल को। आ जाते हैं पता नहीं कहाँ से।